major reports from central banks looking at digital currency, central bank digital currency, and they seem to be in agreement on four major conclusions, which I think you'll probably be in agreement with. One is that central bank digital currency will come. And it's not a question of if, it's a question of when and how fast. Some debate about whether it replaces physical cash entirely or whether it complements it, but everybody's tending to an agreement that it's going to come. Two, it has got to be a partnership between the public sector that has a duty to provide means of payments and the private sector, which is probably better placed to provide the infrastructure to do it. Some debates about where that's shared and how, but we've moved on from an idea that it was either public or private to a view that actually this is a joint enterprise. Thirdly, a need for the protection of fractional reserve banking, i.e. credit, but also almost the ring fencing of the existing banking system within that structure. And that's very, very interesting indeed. And finally, a growing agreement that interoperability, both in terms of technology and in terms of, if you like, product handover, are essential. So hence coming back to the Undersecretary's view and to Tommaso's view of a global interoperable system. All of which to me sounds like, yes, gradual change on to a maintenance of a more efficient status quo. So I'm now going to pass the baton over to Neha, who's spending her time busily thinking about how to upset the apple cart, I hope. So over to you, Neha.
Thank you, Philip. Hello, everyone, and thank you very much to CSIS and OMFIF for inviting me to this important conversation. So my name is Neha, and for the past 4 years, I've been the director of the Digital Currency Initiative at the Massachusetts Institute of Technology. We are computer scientists and open source developers who've been working on architectures for digital money since 2015. We have a mission to engage in neutral, rigorous research to help make it as easy to move value as it is to move information, while making the economy more participatory, open, and resilient. I hope this isn't controversial to say, but our financial system is not working for everyone. The poor have the least access and pay the highest fees. We've seen examples where very wealthy criminals have been able to flout AML and CFT rules in cooperation with large banks, and it took months for people in the US to receive their stimulus checks. At the same time, we're seeing massive economic digitization as more and more activity moves online. But we don't necessarily see the capacity to provide innovative financial products at scale. We have an opportunity today to rethink the way that value moves through the international monetary system at a very fundamental level, and to build the foundation for a more inclusive and innovative economy. But we must be responsible and cognizant of the technology and the incentives of the participants who are involved. Though we might be tempted to rely entirely on the exciting developments in the private sector for this innovation, the ethos of move fast and break things is not going to work for the innovative monetary system. It's not clear it's best to follow in the path of the internet platforms, even though the internet provides a very interesting model for how this technology might evolve. But the internet platform started as a very open, competitive landscape and evolved to monolithic companies, which emerged with startling influence into all aspects of our digital lives, including civic discourse. As we engage in this next era of digital money, we need to be thoughtful and focus on open, accessible platforms which promote competition and choice. And of course, we have to consider the underlying tension between privacy and enabling our public policy goals to prevent criminal activity. This, to me, is the most interesting technical research question. Though those responsible for enforcement might be tempted by broad data access, we have to remember that there is real economic value to privacy. And in a world of competing currencies, which we might have, a currency that is not surveilled might be more appealing than one that is. We have to be willing to think beyond our existing AML pathways, which I would argue are just not working well enough anyway. An architecture which requires the government to see all consumer financial transactions does not seem in line with our country's privacy goals. The technology in cryptocurrency could provide a means of enacting policy ideas, like, for example, keeping low value payments private while enforcing other restrictions. Finance ministries and central banks responsible for safeguarding financial stability are rightly entering the fray to more deeply understand the risks and promises of the technology. In addition to this important research and development, we need to deeply interrogate new technologies and examine their underlying incentives. Understanding the risks introduced by new technology requires counsel from neutral, unbiased, and rigorous technologists. And this work should not be done in isolation, or we'll lose a valuable opportunity to learn from each other and to create a more interoperable cross-national system. So we at my group are honored to be engaging in a multi-year research initiative with the Federal Reserve Bank of Boston to determine if we can design, build, and test a robust digital currency platform that can meet the needs of a national retail payment system. The research that we're engaging in with the Boston Fed has two specific phases. The first is to build a platform that can meet key basic performance metrics related to throughput, security, privacy, and resilience. The second, which will follow and could take 1 to 2 more years, will test the impact of various design choices and the impact that they have on privacy and throughput. We're not establishing policy, but we are making sure that we understand very well the impact different policy decisions would have on technology capability and vice versa. This will help us inform future policy discussions as they occur. So thank you, and I'm really looking forward to this discussion.
Thank you very much indeed. Just a question from me before we get into a bit more of a discussion. There seems to me to be a vibrant debate going on between those who would see digital currency as replicating all of the current attributes of physical cash, i.e. including anonymity, privacy, or all those sort of things, and those who say, actually, that completely throws away the chance for such innovations as programmable money, smart money, and the ability of money to do things very differently for us. And actually, in a digital economy, particularly conditioned by COVID, we really don't need bits of paper with presidents' heads on anymore. What's your view on that?
Well, I think that there's a short-term, medium-term, and long-term sort of view in this space. Short and medium term, it might make sense to shore up existing systems or even to create new systems that more closely mimic the flow of money that we have today. However, I think we would really be doing ourselves a huge disservice if we didn't explore the potential of some of these more innovative technologies. I think that the jury is still out, so to speak, in terms of what type of effect they might have, but it's clear that they are already having some type of effect. And what we need to do is engage very deeply with the technology to see what's possible. And as I said, measure very carefully the risks involved. But I do think we would be doing a disservice if we didn't think about what an entirely new financial system might look like.
Thank you. Tomas, there's a question from a number of people saying, look, shouldn't we forget about CBDC and just think about a digital SDR, which I think is something to do with you?
Let me see. All right. Well, I think the SDR serves an entirely different purpose and has been introduced for a different purpose. But I think the question, stepping away from the specificities of the SDR and the way that we use the SDR at the IMF, there is this question, as you were raising earlier, of a synthetic hegemonic currency, which is essentially a digital currency that is backed by a basket of existing fiat currencies. That basket can include 1, 2, 3, 10 currencies, who knows? Why necessarily limited to the basket weights of the SDR? So the pros and cons of this hegemonic digital currency, right? It was introduced by Mark Carney last year, and though it raises a lot of difficulties and concerns. Who would issue it? Who would serve as a lender of last resort? Who would regulate it? Those are some fundamental questions that we know how to answer when we're dealing with government-issued currencies, and they become much murkier when it comes to this sort of hegemonic currency. And I think that right now, the focus is more on trying to improve the current system and trying to make accessibility to the existing reserve currencies, to make the existing reserve currencies more accessible for cross-border payments. So including in countries that have been de-risked from correspondent banks, that don't have the same access to international payment systems. How can we at least start by allowing those countries to participate in payments? Then we can think about potential future iterations.
But Naveed, how about the Sultan, an operating cross-border payment instrument deployed by a major global bank, backed in fiat currency reserves held in Fort Knox?
So, sorry, there's a bit of a noise. I couldn't pick up the message. Exactly.
I'm just wondering about a Citibank settlement instrument backed by fiat reserves, say, held at Fort Knox, that operate with your whole international banking network. So you no longer have to worry about currency exchange and so forth.
Yeah, my view is, I think, this whole debate around central bank currency, we need to put it in a much broader context. And I think the Undersecretary, Mr. McIntosh, alluded to it. The innovation and the evolution of these currencies, and I think the digital currencies supported by the banks, is likely to happen. The question, and we will obviously, within those, in those considerations which I just outlined, we obviously will embrace it. And it will certainly bring a lot of efficiencies to the financial system. The point which I want to make is that if you look at, in my sort of humble view, if you look at the world today, there is no centralized mechanism to move the world forward. It has to be collaboration, interoperability, all those concepts we talked about. Right now, there are two major issues in the world. One is economic growth, and secondly, productivity. And our view is that if policymakers, the businesses and financial institutions and households, in other words, all economic actors in an economy, operate gradually or directionally on the digital paradigm. Governments are digitizing their economies, including the financial system. Businesses are embracing the same notion. Financial institutions are making their systems more digital, and of course, the extension of that is crypto. And households have the amenability, the confidence, and the level of sophistication to embrace that. And I think if we move in that direction, with that context, digital currencies are likely to happen a lot quicker. And of course, the benefit will accrue to the overall system as opposed to dabbling it in a little more isolated manner. So, but we are absolutely supportive of innovation because innovation is secular. That trend is secular. And by the way, some of the technologies which underpins it, which Neha talked about, can be the underpinnings of many of these digitizing efforts. It doesn't really just have to be digital currency. It can actually help the digitizing the entire economy.
At the last count, there are 85 central banks around the world currently working on, thinking about, or actively piloting digital currency, central bank digital currency. And the ECB, of course, was the latest to announce that that's the direction it's heading in. Can I just ask the panelists as our final question today, before we hand back, are we going to see a digital dollar? And if so, when? Neha, can I start with you?
Certainly. I'm going to invoke Tommaso's crystal ball here and say that unfortunately, I think that that is very opaque to me, and I know of no plans to issue a digital dollar at this point in time. If I were asked to predict broadly, I think that Tommaso outlined a lot of different potential directions that things could go. And it seems quite likely to me that the underlying fabric of money is changing, and those who are responsible for it are going to need to think about how to keep up and how to provide the world with its important services. So I think that we will definitely see digital currency very soon. It might not look the way that many predict it to look right now, but I think it will happen. That's
a fascinating insight, that actually it may not be a digitized version of what we currently use, but something completely different. We shall have to think about that. Naveed, do you think there'll be a digital dollar?
I agree with Neha. I think the innovation and now we are in the making of what is called fourth industrial revolution, and the confluence of all these different technologies taking the world in one direction, and that is operating on a very different paradigm. And in that context, digital currency is likely to happen. It's difficult to put a timeline on it. And when I say timeline, it's already being experimented in different places around the world. When it becomes meaningful enough to be relevant in the financial system, it's difficult to put a timeline on it.
Thank you. And the last word